This is going to make this seem a little bit longer. I normally don't go through this explanation with myself, of course. So let's say you do short the double top. Here's the fear. Traders have the fear that the market is going to do this and start just ripping up and go up to the moon, right? Well, this type of scenario is pretty rare. Even when the market does this, there are clues and signs that we can key in on that will help us to make money. Here's what the market will usually do. It'll usually break out, and then what will happen? It'll come down and do something like this. Well, what is that? Here we have a flag, pennant. You see this? That's exactly what typically happens. How do I know this? Well, let's go down to a daily bar. Now over here in November, we had a huge breakout right in through here. The market just all of a sudden started ripping up, took a lot of traders by surprise. In fact, I know one hedge fund in particular, they took a 45% drawdown right here. They just got creamed in the marketplace because they did not expect the market to start pushing up. So what traders are worried about is that they're going to go short and they're going to lose money. Well, first of all, you should have a stop in the marketplace. So that's going to limit the amount of loss that you can take. Second of all, nobody on God's green earth knew that the market was going to do this, because if they did, everybody would have been in on it. Okay? Nobody knew ahead of time that this exact move from here to here was going to happen. So let's say you did go short over here at the double top. And so you get stopped out and you take a small loss, 30, 45 pips. Let's say it's 50 pips. Okay? Well, as the market starts moving up, let me go ahead. I've gone down to an hourly bar. Let's go back to February. Hopefully I'll be able to get it. I may not be able to get enough data. Let me try one more time. March, February, January. Come on, baby. Come on. November. Praise the Lord. So here's November. Remember, here's this big break. Let me get November back on here. On the daily. I'll just drag it in. So here's where the market broke to the upside. This is late in November. Okay, let's get the exact date. And remember, what we're trying to do is prove to ourselves that we're going to have an opportunity to get in. Remember, the reason why we're afraid of things is because we don't deal with it rationally. Okay, again, this is not normally, I don't normally go through all of this. Okay, so this is going to add to the time here, but you'll see how quick this really goes. So this is about the 22nd. Okay, so let's get this out of the way. We'll go here to the 22nd. 22nd. Look at this. Okay, so the market explodes to the upside. Then what happens? The market starts, it trades into what? A pennant pattern. The pennant pattern breaks. The market does retrace a bit. Again, any kind of prudent money management, you'd have to place your stops below these lows. So right down here, and look at this, 91.40, 91.20. I mean, come on, folks, 35 pips. Even on a day trade, that's a reasonable amount. So the market starts trading sideways again. So what do we have? Let's look at this whole pattern here, because this is where the break actually happened. So the market pushes up. You have a pennant pattern. So this was before the break. Remember, here's the 22nd. This very small bar right here. So the breakout actually occurred here. So let's say, hypothetically, that you were shorting. And you'd have a good reason to. Look at that. Look at all this resistance. So up until this point, you're thinking, man, this market looks like it's going down. Let me sell it because it looks like the likely direction is going down. Okay? And if we bring back in the daily at this point, you'd be looking at this. Resistance, resistance, resistance. You do have this aggressive uptrend going on here, but your market came down and is right back at resistance. So you've got a strong resistance level right here you're shorting against. Again, like I said, there were good reasons to go short. So then all of a sudden you're merely thinking, okay, the position's going against me a little bit, but wow, look at that. And so this is what you're thinking to yourself. Oh crap, I just got stopped out. Oh man, what's going on? Now let's look at what happens here. Look at this pattern. This pattern is indicative. This means what? We have a possible trade. It's right there in front of your face. Now, you've got to be open to see this whole thing. And I've showed you in just a few seconds how, as this thing is trading along, and this is 3 o'clock in the afternoon Eastern time. So anywhere in the U.S. you'd be able to trade this. Anywhere, England you'd be